Berkshire Hathaway reporting a small decline in second quarter earnings. Operating profit at Warren Buffett's conglomerate dipped 4% year over year to $11.16 billion.
To most people, Berkshire Hathaway is one of the most fascinating success stories in finance. A giant of a company built on the simple wisdom of its famous leader, Warren Buffett. Fast forward from 1965 to 2023, and the company pulled off a compounded annual gain of 19.8%, absolutely crushing the S&P 500. It's a run that made its CEO a legend and the poster boy for making smart, long-term bets. So, how did they do it? And most importantly, why is this beloved company also one of the most criticized? The story starts in a pretty weird place, the failing textile company in New England. In 1965, Warren Buffett took it over, and what he did next was one of the biggest pivots in business history. He started shutting down the textile mills that were losing money and used the cash he had left to jump into a totally different business: insurance. Now here's the thing. This is where the genius of the Berkshire model was really born. Buffett looked at insurance companies and had a huge realization. They get paid premiums up front, but they only have to pay out claims way later. That giant pool of money that just sits there, known as the float, could be invested. He thought to himself, what if we could play with billions of dollars of someone else's money before we had to give it back? That float became the rocket fuel for everything that came next. It was perfect, right? The business model was fairly simple. Use the float, which was always growing, to buy great companies when they were selling at a fair price. Think See's Candies and Geico. Buffett built this decentralized empire where he'd buy a company and then just leave the managers alone. He gave them total autonomy. This created a culture where leaders felt like owners, and they were free to think about long-term success instead of just hitting next quarter's numbers. But a giant that big is bound to cast a long shadow, and as the company has gotten massive and its founder has gotten older, reality has started to sink in, and the cracks are beginning to show. The biggest question is what happens next. In late 2025, Warren Buffett is set to step down as CEO and hand the job to his chosen successor, Greg Abel. Now, Abel is very well respected, but he's known for being much more of a hands-on manager, which is the complete opposite of Buffett's style. And while Buffett will be staying on as chairman, the market is watching and has no idea if anyone can really fill his shoes. Then, there are the problems with the Berkshire model itself. For years, people have pointed to Berkshire's enormous pile of cash. We're talking hundreds of billions of dollars, and said it's proof the company isn't using its money well. The argument is that Berkshire is just too big now to find deals that are big enough to actually matter. Admittedly, that decentralized structure that was once its greatest strength is now being seen as a risk. The lack of a central boss looking over everything has led to some big mistakes and controversies, from massive scandals at major investments like Wells Fargo to its holdings in fossil fuels. Critics say Buffett has a history of defending companies through major problems, and that Berkshire's complicated structure helps it take advantage of tax loopholes. For a regular investor, the whole thing can feel so complex that it's impossible to see what's really going on. If you're finding this story about Berkshire's two sides interesting, make sure to hit that subscribe button for more deep dives into the giants of the business world. So, what's the real story here? Is Berkshire the ultimate example of smart, patient capitalism? Or is it a ruthless giant hiding behind a friendly face? The truth is, it's probably both. Berkshire's reputation is earned. Decades of incredible financial success and a unique culture built by a legendary founder. You can't argue with that. But its criticisms come from the problems that happen when you get that big, that powerful, and have to face the ethical challenges that come with it. The company is a lot like its founder. Brilliant, successful, but definitely not perfect. Warren Buffett leaving marks the end of an era, and what he leaves behind is a company that's both a monument to long-term success and a complicated lesson in the dark side of corporate power. So I'll leave you with this question. Is Berkshire Hathaway a model we should all be trying to follow? Or is it a relic with a dark side we should be worried about? Let me know your thoughts in the comments below.